I'd like to introduce Costa Casiou. Costa, you
Jeff.
might give us a couple of minutes on your background and your expertise. And I was particularly interested in your pivot, your recently in the last 18 months or so, and what you've decided to do with your own business. Can you tell us about that?
Yeah, thank you, Jeff. Thanks for having me on the SIM-PAC live webinar series. Yeah, the last 18 months have been transformational for myself and for SPINFRA. So we're a infrastructure advisory firm that supports the decarbonisation supply chain. And most recently, we've made a pivot primarily in the investment management and funding space, where we support niche players seek and source capital to help them drive the development of their projects and their business and product offerings in the market. So we've identified a gap in the market and a need where there is a disconnect between the money and the opportunity, and we're working as an enabler within the broader energy supply chain and infrastructure supply chain to help bring those together to unlock the potential of those opportunities, Jeff.
Thanks, Costa. And what are you finding in the market out there in that decarbonisation and sustainability supply chain especially?
What we're seeing, Jeff, is that there's been a very distinct and evident shift in sentiment and confidence in the market. So we're seeing that the view of being bullish has changed very much to a bearish sentiment. We have experienced what would you say, a reprioritization of projects and how that capital is allocated within the sectors across the supply chain. And some of this is obvious, as in the hydrogen thematic, for example. There's been a lot of airtime through media and through industry around that fundamental pivot and shift with what's happening in hydrogen. And other ones are not as obvious, but very relevant, and they're very much centered around the political implications. So more broadly around energy transition and around the priorities with that source of development in the market. So it's very clear that the sentiment has changed. And what we have experienced is that there's very much a 3-speed supply chain that make up the current market in what we're seeing, speaking with clients and developers within this space. Each of those, Jeff, have their own funding and investment challenges. And what I would like to do today is very much share with the audience what they are and how they're currently being addressed in the market. So let's start off with what we call the economics first bucket. So very much projects that are driven by a specific return on investment, where it is well understood, the value proposition is compelling. It's very much pushing out the thematic around old fossil fuel and clearly understanding the economic paradigms around this. We've seen that within electrification, solar and storage in particular,
Yes.
and other areas, whether it be off-grid and even behind the meter investment opportunities, where there's a fossil fuel reduction thematic and an objective through that, Jeff, and it's very easily understood by the market. So because it's well understood and it is common state of play, it can then easily be financed, and financed through traditional means like we know it. So we've seen over the last 2 to 4 years especially this drive in renewables, and the investment has followed that, what we call it follows the money. The money follows the opportunities, and there's a commonality in the market around understanding the objectives of those projects. So return on investment, quite compelling, quite well understood. So that's the first bucket.
Yes, that was, just to recap, that's the economics first projects. The other ones that the economics of them are driving those projects. and they're going gangbusters as we're seeing around the world. And
Yes, yes.
there's probably also some energy conservation projects in there as well, um, and some fossil fuel reduction programs because they're saving money, but their business plans stack up because they're so compelling that with renewables driving that as well.
Mm-hmm. Yeah, and we're seeing that in the market at this point in time, Jeff. We're also seeing that there's another bucket where projects and opportunities are fighting for attention, and that vertical is very distinct, and it's probably the vertical that needs the most support in our view. In that, there's low-hanging fruit opportunities in what we call them, where there's easy wins for emission reductions, which may require no to minimal capital investment. And they're opportunities that we typically see down the curve in terms of size and scale, and very much are struggling to attract the capital investment required due to very constrained and archaic procurement methodologies that the market has adopted and continues to adopt.
Yes.
In this space. So there's I think Nick's on the call here from WearTech, and we have many conversations around how do we break the barriers of procurement to be able to unlock and facilitate the capital investment. And you look at a niche player like WearTech, where they have a very distinct sustainability offering in the clothing sector. It is poorly understood. So unless you're able to change the way you procure internally, you're not able to realize these opportunities, Jeff, by seeking the capital to enable growth.
Yes. I mean, I've said at a SIM-PAC Live about Nick's company, WearTech. Of all the companies, 250 companies that presented last year at SIM-PACs, he's the one I don't understand why his order book's not full, because it's just a no-brainer. It's just shifting procurement from one brand to another. But you've got length of tenure of some of these procurements where they've bought uniforms out for 10 years, and also there's a disjoint within the larger organisations between the people wanting to do the talking in terms of sustainability officers and sustainability managers, and they kick you down to the procurement guy, and that's not in his mandate. And so, yeah, there's definitely a disjoint in some of those. Another one I've seen, and we talked about this, Costa, is roading. Is you can now make carbon negative roads. And what's more, they're even cheaper. They're even cheaper than fossil. They're a wonderful thing, even cheaper. But the procurement of not buying that, it doesn't cost you. There's no capital outlay. That's the other thing about these fighting for attention projects, which get me. Is some of them don't require capital outlay. They don't require additional spending, but they're not getting the attention they deserve. And maybe because there's no champion within the organisation that's trying to fight for money for the project, so it just goes to procurement.
And it makes it very hard to unlock and demonstrate that value proposition when you're not able to source the capital to demonstrate that to the market. And if you're constrained by those procurement challenges, where you're not able to source the right internal people who will unlock this opportunity, they don't go anywhere. And it's a shame, because the topic today is around niche players, and it's centered around the innovators. We all have a responsibility to support that ecosystem and to very much unlock those opportunities by seeking the relevant capital. What I will say, Jeff, is the third bucket, if you like, is very much what we like to call new pathways projects. So projects that, like Nick at WearTech and others on the call today, very much around the true innovators, the first movers, if you like. So the ones that are forging a new pathway, where they typically present investment bankers and investment firms problems, if you like, because it's not understood. And what I mean by that is very much around there's no history or similar projects or benchmarking or precedent for that matter to be able to say, well, we've done this before, it's well understood, and we're happy to do it again. So it's very much around how do we support the supply chain through driving the development of new pathway projects and offerings. So more broadly speaking, not just projects in itself, but the ecosystem and the supply chain. And I think the real important thing here to note, Jeff, is that they often require a new economic paradigm. And what I mean by that is there's usually a fundamental change in the way the product or offering is achieved or undertaken in the market. Yes. And that might be from an operational point of view, that might be from a product or service point of view, but it's very much around being able to change the way people understand what's trying to be achieved by the innovators so that they can support the funding of that. And typically there's not a conventional return on investment, if you like. There's not a typical platform or thesis or precedent where you can say this return on investment makes sense and it'll clear the internal banking hurdles of being able to make an investment in these opportunities. So I think each of those three buckets of projects and offerings have their challenges, but it is very clear to me, who's very active in the market with the supply chain, in that collaboration needs to take place to be able to unlock the capital investment to facilitate the realization of these opportunities in the market.
Yeah, can I take you, because you use that word collaboration, I want to take you back one step to the new pathways projects, because we started talking about the triple headache they give bankers, and we got through a couple of points. We didn't get the third. So the triple headache they give is that no business cases. The death knell of these projects is who else has done it. And as an entrepreneur that's got new businesses up and funded them, it's a death knell. You go, oh my God, you hear that from a banker, who else has done it? Remembering these are projects that are breaking a 125-year cycle of reliance on 24/7 fossil fuels. So of course, a lot of the time, no one's done it. And that's one point. And the other is that if you're going to start with a blank sheet of paper, which a lot of them do, innovators, they're going to start with a blank sheet of paper. Of course, you would build in wins for the community and wins for the environment and wins for the Indigenous people. That's just what you would do if you started with a blank sheet of paper. So it's not all of that. And also the collaboration on that as well is that often these projects have multiple parties brought in. And so there's not one clear winner at the end of the day for profit. And so, imagine that, sharing profit and sharing the rewards around it's like, that's the second headache. And then of course, the third was this triple bottom line that's been with us since the 70s.
Yeah.
But funny enough, I think is only being unlocked now, because the renewable energy and the ability to build your own renewable energy is really enabling a triple bottom line now, where you couldn't do that when the whole power systems were centrally organised and most of them run by government. It was very difficult to look at that. So I think that the whole concept of that triple bottom line is only being unlocked. So I just thought I'd clear that.
I agree.
Make that point.
I agree, Jeff. I think it's a very relevant point. And it also ties into the mission and function of the investment community and how they are aligned to being able to unlock the value proposition outside of just being a financial investment per se. Does it tick the box? Does it generate a specific return on investment, et cetera, et cetera? And I think the other underlying tone to that and very much reality, which I'm sure we'll cover through the webinar today is around the topic of risk, because with capital, risk is very much closely integrated and aligned, and I think that there's a journey that we need to go through in better understanding that as a niche player and also as a participant in the investment community, whether it's on the bigger end of town from an investment banking perspective, and on the smaller end of town as potentially a high net worth investor who wants to support these initiatives. So everyone has a different and very clear reason for wanting to support the ecosystem and the supply chain through investment. And I'm really excited about talking through some of those points today, Jeff, because the audience all has different perspectives, and I think it's important that we share them today with them, because there's a time now in the market where that sentiment has changed. So the competition for capital is extremely high.
Yes. Can you define what you mean by niche players, and let's also look at why they're important to the supply chain?
Mm-hmm. Niche players can be in the form of infrastructure developers, startups. They're typically boutique SMEs, lab to market providers. So those that are specialists from either a technical competency perspective or very much innovators, first mover advantage, bringing something very creative and innovative to the market that enables or unlocks other opportunities per se. So very, very much either individuals or organizations that are pushing the boundaries and are bringing, say, a network of other players. So I see them as enablers. Enablers that unlock and play a critical function in being able to drive change. Being able to drive change through breaking down the barriers of larger firms, larger corporates, and organizations that are a lot more rigid, need a lot more momentum to be able to make that step change, and very much driven by partnering and collaborating. So their existence is very much based on how they leverage resources, their expertise, by contributing and working with those in the ecosystem, Jeff.
I see partnership and collaboration is existential to their existence, really, and not so much to the bigger players. And also, the bigger players sometimes can have a problem with sharing their lunch in the playground.
Yeah. I think
take all the other kids.
We've all been there at one point in our lives, Jeff. But yeah, I think that's a very good way of looking at it, because we talk a lot about collaboration, but actually understanding how to collaborate is a different conversation altogether. And I say this with the utmost respect and empathy with those on the call today, because it's clear that it is very much a priority for the niche players to collaborate, and without collaboration they are unable to unlock their value proposition in the market and their presence and purpose across the supply chain, because of their size and because of their capital constraints. Yes. So it is extremely important that we all support and that we all create an environment where we do share lunch in the playground, so to speak.
Yeah.
Because if we don't share that sandwich, then ultimately no one benefits. Whether it's having a great idea or seeking the capital, there needs to be that partnership together to unlock that benefit.
Yeah, and look, you only need to go to a SIM-PAC and listen to the speakers to see that the innovation that's actually coming from individual people that are trying to make a difference at the small end of town is quite amazing. And I know that not just in sustainability, but in other things as well. You let these innovators grow, you let them mushroom up, and then the bigger players come in and they make acquisitions, and that's that's part of life. But you need them. You need those ideas mushrooming.
Oh, without doubt. And you mentioned the word acquisition then.
Yeah.
Very much niche players need to grow.
Yeah.
And, if you can't grow organically, then the only other form is inorganic, and that's through either being acquired by a larger firm or by receiving a strategic investment that enables and unlocks that growth. So unless you collaborate across the supply chain, and unless you're able to demonstrate that value proposition within the market, growth does not occur. And when I say growth, I'm talking broadly. So it's not only from a financial perspective, it's also from a social economic, and also from a mission perspective. It's also from a community perspective, and so on and so on. So it's very much all integrated, and it's all very much dependent on the willingness to be able to leverage the niche players' specialty and point of difference in the market.
Right. So let's jump over to the investment and financing supply chain side participants. Really, who are they, and what do you think is their want or need?
Yeah, great question, Jeff. I get asked this all the time in regards to, well, who do we go to seek strategic investment, and what does that look like? So, is it debt? Is it equity? Is it a combination of both? How do I source the funds, and who do I source it from? So there's kind of two elements there. There's the, who's the provider, and in what configuration or form. So in terms of who the providers are, you've got traditional banks. What we're seeing is a lot of green funds being set up now. So private equity funds, private money that gets pulled together to create very specific investment vehicles that either have a green thematic, so a climate tech green thematic that wants to invest in the supply chain that creates or develops a certain offering or product. So a lot of private money is coming together to create those mechanisms and vehicles to be able to go to the market and directly invest in, say, a WearTech or other product-based providers. Then there's the high net worth individuals. Then there's the family offices who take on a very different view and approach, where they invest their own money directly within the supply chain. And then there's opportunities through grants and debt markets. So there's a lot of government initiatives, R&D opportunities that supply chain participants can seek funding for, as well as debt instruments, whether it be private placement bonds, green bonds, private credit debt, and other forms such as convertible notes, for example. So there's instruments and providers out there that facilitate the growth of niche players by either investing directly or through a vehicle.
Okay, let's just move on to give us your insight to market intelligence. Give the people listening, what are you finding out there? You've said that there's definitely been a shift. Mm-hmm. What else are you finding?
What we're seeing at both sides of the spectrum, Jeff, is that there is a definite gap between supply and demand. Supply and demand in terms of the capital that's available. And what we're seeing, it's very dependent on risk, appetite, and having an understanding for those that are investing of what the long-term future looks like, and being able to assure themselves through various levels of due diligence that their investment will be maintained, retained, and grow over a period of time. So it's very much around risk allocation and very much around how you attract the capital to the niche players, whether it be infrastructure developers on one spectrum or small product suppliers on the other spectrum. So what we're seeing is very much being able to attract what we call pre-development capital. That is the number one challenge right now across the whole supply chain. So typically people call it high risk capital. So the risk of not realizing that that gain or that value proposition because of the limitations or challenges that niche and nimble participants are experiencing at the moment, Jeff.
Do you think there's a language barrier? Do you think that the bankers and the niche players are talking two different languages?
There is most certainly a language barrier, and I also think there's very much a misunderstanding of being able to quantify and assess the opportunity. So I work closely on a daily basis across the whole market, from trying to fund a $200-400 million water project or a renewables project on one spectrum to, you know, trying to seek $500,000 to get a sustainability initiative or product to market to be able to test it and demonstrate its value. It's very much around being able to say, right, what is the risk and how do we find a investment product or avenue that aligns with the money. So, and what I mean by that is whether it's a high net worth individual or a green fund, they all have specific mandates, and those mandates cover a set of criteria that they're seeking to invest. So unless 1 + 1 = 2 and there's an alignment between the opportunity and the mandate, only at that point in time does the capital come to the the need.
Do you think that having a translator, an intermediary such as yourself, is an important step or an important part of trying to make this ecosystem work?
Without doubt, and we're finding that in the market at the moment, Jeff, in that because there is a significant funding supply deficit and the competition for capital is extremely high, we find that it's very much driven around market sentiment and confidence to be able to drive the demand to invest in projects across the supply chain. So it is also clear that because of this, the traditional means of seeking funding have changed. So you've got to be a lot more innovative, a lot more creative in how you seek and structure those funding and investment opportunities, and to be able to unlock those opportunities in the market. So what we're seeing is very much people like ourselves, our role is to bring together the capital across the supply chain, very much like a personal bank manager, if you like, where we help.
Or a mortgage broker more particularly.
Yeah, for sure. So I think the other day you shared with me, Jeff, an interesting statistic that mortgage brokers wrote nearly 75% of all new home loans in Australia. And
that shows you the language barrier between a homeowner and a banker needs a mortgage broker. I think that gap is real and is just as big between small niche players and investment banking.
And it's very real in across the energy supply chain, in that it's not well understood. So we need to work through those language barriers. We need to bring the investment community together with the niche supply chain in a collaborative way where we are able to unlock the potential of those opportunities by attracting the right capital in the right way. And
yeah, sorry, I'm conscious of time. Just a couple of other points. Do you see the investment bankers being actually interested in the smaller niche players. Like, it's one of the things that stunned me that we don't have them turning up to a SIM-PAC live to look at all the opportunities that might be coming up, these ideas that are bubbling away.
I think the biggest challenge that we have is scale. And I think there is also a misperception in the market around they're small players, so they're not relevant, or we're not able to shift the dial. I share a very different view. I think the opportunity is all down the curve in that the investment community has the ability and should invest and support the niche market, and the best way to do that is through a platform like a SIM-PAC Live, where we collaborate, we allow the niche players to present to the market, to raise awareness, and to very much bring not only investment bankers and investment firms, but high net worth individuals, family offices, those that represent green funds or green related organizations that have an interest and a mandate to invest in opportunities, and very much create a platform where we're bringing it all together. And I think that's been a big common theme in today's webinar, Jeff, in that it's about how do we bring the money to the need, and how do we facilitate that coming together. And I think SIM-PAC Live is a great platform for that.
Thank you for that. I've noticed a shift since Brisbane last year and Brisbane this year. Some of the bigger players sent speakers to the first Brisbane conference and sent them. I know one girl, I won't name her on the program, but she was sent in, gave her speech, and then got in a taxi, went straight back to the airport and flew back to Sydney. And they didn't let her stay at the conference. This time she turned up for 2 days and she moderated a session because they suddenly realised the value was actually in them networking with all the other speakers and everybody in the room. I see Lauren Hamilton's on this webinar. Her boss, Sean, stayed for the entire 2 days at SIM-PAC Brisbane. You were there. You chatted to him, which I thought was incredible. Because he's the founder of a very large company, as busy as anyone in the world, and he took that time out. And so I am seeing it a little bit different. It's slow. I'm seeing some of the companies send their business development people along, and to network with the other business development people, which is great. But still, the people not coming out of the glass towers to understand where the innovation is coming from.
I agree, and it will take time, but I think it all comes down to understanding what your value proposition is across the supply chain, and being able to work with people and organizations like ourselves that can help facilitate the funding solution and very much help raise awareness, because ultimately, SIM-PAC's been around for 18 months now, and within those 18 months, there've been over 200 or 300 participants and companies that have presented, and I think it's through those interactions that unlock opportunities in the broader market.
Yeah. Okay, look, thank you very much. We've just gone over time a little bit. Costa, great chat. Thank you for everyone for turning up.
Thank you so much.
You can reach Costa. You'll find him easily on LinkedIn to chat to him. You can always chat with me whenever you like. Happy to hear from you. Thank you very much.
Thank you so much.
Bye, everyone.
Thank you. Goodbye. Thanks for joining.